Hello and welcome back. In today's session, we are exploring the Federal Reserve, the central bank of the United States, and its profound influence on the forex market. Understanding the Federal Reserve's role and decisions can provide critical insights into market movements, helping you refine your trading strategies. Let's dive in. We'll start with what the Federal Reserve, aka the Fed, actually is and what it does. The Fed is the central bank of the United States and oversees the country's financial system, issues currency, and formulates monetary policy to maintain economic stability. What makes the Fed unique is its independence from the political influence, allowing decisions based on real market conditions and detailed analysis. For forex traders, the Fed's actions are pivotal. Changes in monetary policy, such as interest rate adjustments, often trigger fluctuations in exchange rates and can significantly influence the value of the US dollar. But what exactly are the Fed's goals? First of all, the Fed aims to foster economic conditions that create jobs and reduce unemployment. Secondly, by controlling inflation, the Fed protects the purchasing power of the US dollar and prevents devaluation. These goals shape the Fed's policies and actions, directly impacting global markets. Now, to achieve its objectives, the Fed usually employs several key tools, such as interest rate adjustments and open market operations. You see, the Fed raises or lowers interest rates to influence borrowing and spending. Higher rates curb inflation by reducing demand, while lower rates stimulate economic growth by encouraging borrowing and investment. To control the money supply, which is basically what the open market operations are, the Fed buys or sells government securities. Purchasing securities injects money into the economy and lowers interest rates, while selling them reduces money circulation and raises rates. These actions help the Fed steer the economy toward its dual goals of employment and price stability. So now that you know what the Fed is and how it works, you may be wondering, how is it all organized? In essence, the Federal Reserve comprises a board of governors and 12 regional Federal Reserve banks. The board formulates monetary policies while the regional banks implement those policies. They usually implement them across different parts of the country in one go. At the helm is the chair of the Federal Reserve, one of the most influential figures in global finance. Since February 2018, Jerome Powell has served in this role, shaping US monetary policy and impacting global markets. But how exactly do these decisions influence the global markets? Well, when the Fed raises interest rates, borrowing costs increase, reducing profitability and consumer spending. This strengthens the US dollar as higher rates attract foreign investors seeking better returns. Additionally, higher rates help curb inflation, promoting economic stability and making US assets more appealing. Conversely, when the Fed lowers interest rates, borrowing becomes cheaper, encouraging investments and consumer spending. This often weakens the US dollar as investors shift to riskier assets like stocks or cryptocurrencies. Furthermore, lower rates can lead to higher inflation, adding to market volatility. Beyond rate adjustments, Federal Reserve statements and press conferences are critical in shaping market sentiment. Optimistic outlooks can boost investor confidence, while cautious tones during economic downturns may stabilize the markets. By now, it is likely obvious that predicting these actions would give a significant advantage to any trader. However, accurate predictions may not always be easy. To make it a tad easier, here are two major factors to monitor. Number one, data such as unemployment rates, GDP growth, and inflation figures provide clues about the Fed's next steps. And number 2, the Fed's post-meeting statements and press conferences often hint at future monetary policies. Naturally, to follow up on this information, you will need to know when the Federal Reserve's monetary policy meetings occur. Thankfully, these meetings are always held at predetermined dates, with the exact dates published in advance on economic calendars. Each of the 8 annual meetings held by the Fed span 2 days, culminating in a statement and a press conference led by the federal chair. These events are highly anticipated as they often lead to significant market movements. I strongly recommend keeping up to date with these matters by visiting the Federal Reserve's official website. You can find schedules and reports there, and as well, of course, reading financial news outlets such as Bloomberg and Reuters for real-time updates, delving into economic calendars on platforms like investing.com and Forex Factory, and following xChief's social media channels for expert opinions and breaking news. So, in summary, I believe it is safe to say that the Federal Reserve's policies and decisions are a cornerstone of the Forex market. By understanding how the Fed operates, its tools, and the factors influencing its decisions, traders can make more informed choices and better navigate market volatility. Thanks for tuning in. If you found this session helpful, don't forget to like, share, and subscribe for more insights into the Forex market. See you next time.